Hello everyone, welcome to Yadnya Investment Academy. Recently, Metropolis Healthcare Limited and Dr. Lal PathLabs Limited announced its quarterly result. Let us take a comparative overview of both the companies based on a few parameters. Dr. Lal PathLabs is the largest diagnostic chain on the basis of revenue and its pan-India presence, whereas Metropolis is a leading diagnostic company in India with its presence in 20 states and 220 cities. If we compare the revenue of Metropolis and Dr. Lal's, revenue of Metropolis was marginally down by 0.75% from 302 crores in Q2 financial year 2022 to 300 crores in Q2 financial year 23. Although year-on-year revenue declined, but the revenue in the current quarter is the highest non-COVID revenue so far for the company of Rs 288 crore, which accounts to 96% of total revenue. COVID testing revenue is now at negligible levels. COVID revenue declined from 54 crores to 12.8 crore during the quarter. The management wants to increase its B2C revenue share to 65% of the total revenue from the current share of 60%. In terms of value mix, Metropolis is more focused on specialized and semi-specialized tests, which together accounts to 72% of total revenue and 84% of the revenue if we include wellness tests as well. The year-on-year growth in wellness testing revenue is 40%. Therefore, Metropolis is more focused towards wellness testing. The routine tests for Metropolis, although have high volume, it accounts to only 16% of total revenue. Routine tests are the ones where Metropolis faces most competition after entry of many players in the recent time. This is what differentiates Metropolis from Dr. Lal. Dr. Lal PathLabs total revenue increased by 7.1% in the current quarter to 534 crores. The non-COVID revenue increased by 14.8% in the current quarter, which was 448 crore in the last quarter of the previous year. The non-COVID revenue accounted for 96% of the total revenue and is currently near its pre-COVID levels. The COVID testing was only 20 crores in Q2 financial year 23 as compared to 50 crores in Q2 financial year 2022. COVID revenue reduced by 61% on a year-on-year basis. If we compare the margins, the EBITDA margin of Metropolis reduced to 79 crores in the current quarter, and the EBITDA margin has also fallen to 26.3 crore against 29.82 crore in the corresponding quarter of last year. PAT margin of Metropolis was impacted as the finance cost increased due to high interest cost on account of acquisition of high-tech diagnostic center and impact of foreign exchange. Higher depreciation was also charged due to investments done for growth. Margins of Metropolis were affected as cost pressure remained and the company did not increase its prices. If we see Dr. Lal PathLabs, the revenue in the current quarter has increased on a Q-on-Q basis and the margins have also witnessed an increase. The company is currently focusing on volume growth. Dr. Lal PathLabs reported a COVID mix which contributed to 10% of total revenue last year, which is much lower during the current quarter. COVID revenue for Dr. Lal PathLabs is also low as margins are low due to price capping done by the government. If we compare the labs, Metropolis has over 172 labs and 3,379 collection centers. Due to the quality and accuracy in each test, Metropolis is among the top 1% laboratories worldwide for quality assurance. Dr. Lal PathLabs has over 277 labs all over India. Metropolis offers a 4,000 plus test that includes right from the routine test to advanced test for cancer, neurological disorders, various diseases. Growth in revenue of the company is also volume driven. Number of patients in the current year increased by 17.3% to 3.1 million and the number of tests increased by 18.1% on a year-on-year basis to 6.6 million. Revenue per patient decreased from 977 in Q2 financial year 2022 to 942 in Q2 financial year 23. Revenue per test for Metropolis declined to 442 during the quarter. Test per patient has declined, although number of tests has increased. This was primarily due to high COVID testing in Q2 financial year 2022. In Q2 of last year, government did not place price capping on COVID test, due to which revenue was high and also the margins were not affected. If we compare to pre-COVID levels, the test per patient of Metropolis has increased from 1.9 in Q2 financial year 2020 to 2.1 in Q2 financial year 23. Overall, revenue per patient and test fell on a year-on-year basis due to decreasing prices for COVID test. Now, let us analyze Dr. Lal PathLab. There has been an increased relevance of wellness and bundle test, especially post-COVID outbreak. Swasth Fit, which is the bundle test, contributed to 95 crore, which is 20% of non-COVID revenue. Number of patients increased from 6.9 million in Q2 of last year to 7.2 million during the quarter, along with an increase in revenue per patient of 741. The number of tests also increased to 19.2 million in the current quarter. Increase in number of patients and tests is strongly driven by improvements in the home collection capabilities and revamped digital assets at the front end. There is also a good increase in the number of patients and number of tests of Dr. Lal PathLabs. With accelerated shift from unorganized sector to organized sector, coupled with increased health awareness among the customers, we can expect the revenue growth to improve and the margins to sustain at a pre-COVID levels. Looking at the valuations, Metropolis is currently trading at a PE of 47.87, whereas for Dr. Lal PathLabs, PE is 80.16. For Dr. Lal PathLabs to sustain at this valuation level, it needs to maintain its current volume and value growth. For more detailed analysis of Metropolis and Dr. Lal PathLabs, do visit our website. Thank you.